It's only been around 100 years. Got to be. It can't be right. It can't be
That's
true. The
right.
Rockefellers did it. Yeah, it can't be right.
It was, yeah, it's been around since like the 1600s, and you're like, yeah, there's no way this thing is real. No chance. No chance anything withstands the test of time. No
Yeah.
chance. How are you guys today? What's happening?
Good. Doing
Man,
good.
we're good. I'm just freaking slammed in W2 world. Our Optum United healthcare deal finally went through, so I'm like
Oh,
the
good.
middleman between all this stuff.
Yeah, but I
Uh,
bet it was a blessing though, either way, right?
yes.
That's
I
good.
kind of want to get laid off. So like all my severance kicks in and my stock accelerates and vests. Like I want this kind of somewhat of a golden parachute to happen. So then I can just focus like on this.
There we go. Yeah, I was speaking with Greg just the other day. He said you guys had a really good call, and was just
Oh yeah. Is he gonna join?
I don't know if D'Alessio is already in our group.
Yeah.
He's already here. Yeah, I don't know if he's going to be on here today or not, but I see also Michael and Parker on here too. Parker, that's all. If Parker would like, Parker just had a baby like a week ago, which is pretty exciting. So adding,
Congrats.
adding to the population, doing his thing, which is awesome. So I'm an
And you're
uncle
not too
as
far,
well.
right? You're
Monday.
Monday.
Yep. So I'll probably I'm gonna still try and do our live call if I can, but also I'm gonna just everyone can just be on standby on my situation.
Just
Obviously.
do it in the hospital, man. No big deal.
I'll
Your
just be
third kid, man.
FaceTiming with Rachel. Yeah. All right. Well, let's dive into this thing. I apologize. I'm a few minutes behind here, guys. Thanks for being flexible. I was it doesn't matter, but I was driving from it. I think I told you guys on one of my the goldenrod building for those that were at the live event. The one that had all Dave, you were there, right, last year, where they had all of that inventory inside of that warehouse. All that stuff is gone. And what I did is I got eminent domain on another site, and so I took those doors off of that building and I went and put them on and cut out some doors, and we put those doors on the warehouse. So
Sweet.
I got a quote. It was $32,000 to do it, but for the doors that I've already owned and to cut them out was 4,100 bucks. So I was like, hey, not a bad not a bad upgrade. And I think that having four doors versus two is an upgrade. So
Mhm.
well, let's jump into it. I want to let's kind of like we did last week. Zane, if you want to give us just an overview of how about this? Will is one of our newest members. Will Clark here. That's awesome, man. Thanks for making it today. I was
What's
just
up,
texting
guys?
back and forth with
Yeah.
you. Man, give us a little bit of 30,000 feet about you, what you're doing, and everything, and we'll kind of go from there. Thanks for making
Yeah,
it.
of course. So right now I work in the sales world in the construction industry. I've been doing it for the last 3 years. My dad actually started the company back in 2001. It's all low voltage home automation for high-end custom homes down here in South Florida. But, I came across Nolan's content about 6 months ago, and I've been digging in more and more. And it got to the point where I was like, this guy's preaching a lot, making a lot of sense, and I want to get involved. So happy to be here and hope to connect with a lot of you here in the near future.
Awesome. Yeah, we're excited to have you, Will. I know it's what makes this fun is it's turned out of the gate when we first got started. There's Greg on here too. When we first got started, it was like we really didn't have an idea what we were doing. Now this has turned into members are hanging out with members, they're doing deals together, and it just turned into like an opportunity club where other guys have opportunities and they're presenting it to the group. It's turned into like it's been really fun. So thanks for being here, Will. We're excited to have you, man. So um let's just do a quick little rundown. I want to get what everyone's working on this week. So Zane, you want to lead us off on kind of any updates on what you're up to and kind of go from there.
Yeah, I've been working with several members and they all got good stuff they're working on. Solus is a new member of the group.
Hey, Solus. Oh, I didn't realize
I'm
you were
not,
on here either. Hey, I'd like to, yeah, let's before you get in, I'd like to hear Solus too. Hey.
Hi, Nolan. I'm doing well. I hope like this is my first time joining the
No,
meeting.
that's great. I didn't realize that you're on here. I've only got like six different screens I can see at once on the way I've got my Zoom. So just like Will, give us kind of your story, what you're up to, where you're at, and everything, and what you're trying to accomplish next. See if we can do it together.
Okay. Well, I'm from California. I'm in Wichita, Kansas right now. I have some residential real estate already, so I was able to, since moving from California, it's much more affordable in the Midwest.
No
So
way.
in Wichita, I
No
was able
way. I
to
don't believe it.
buy, yeah.
No way.
I know a lot of out-of-state investors are like active here in Wichita, so it's interesting to see that. But I was able to get a fourplex and then a couple single family homes. Um, but I've discovered I'm not so excited about residential real estate anymore. I just think it's too unpredictable, a lot of maintenance. The tenants, I would like to kind of be more separated from tenants, not dealing with a lot of tenant issues.
Agreed.
So I figured I think commercial is the best route for me. So I joined the group because I wanted to kind of get mentorship, get help on how to jump from residential to commercial, and kind of just transition totally out of residential.
I
And
love
you've been part of the group for what, like 4 weeks now, actually?
Yeah, like a month.
Okay, yeah. And then you got some good stuff you're working on. We've been working on a couple deals, but one in particular over this past week. But if you want to give us the rundown, that would be freaking awesome.
Yeah, I like to hear it.
Yeah, I like to share and get everyone's opinion on it.
Yes.
So it's a warehouse in town, like 13,000 square feet. So it was listed, it's been listed for a while at like 680, I think. And then the agent that I'm working with kind of brought me this deal. So I started asking questions about it. And I guess the seller had it listed for a while. And once they realized someone was asking about it, they actually dropped the price to 560. So then I was really interested and I knew this seller was motivated. So I gave them two offers, one seller financed
Yeah.
offer at the 560, 560,000. And then I gave a cash offer at 505,000. They didn't respond to the seller financed offer. They responded to my cash offer and came back at 535. So that
Which is
was per day.
which is what cap rate at that 535.
Damn.
11.75 cap.
And it had I think four tenants, is that right? But we took out one of them because they were month to month. So it was 11.6 or something like that with three of the four tenants, right?
Yeah.
Wow.
Okay. And then now we're trying to work on somehow creatively financing this thing. And I think you might have spoken with Adam Morris
Mhm.
maybe
Yeah.
already.
Yep.
Did he hopefully give you some sort of like, I guess some insight or at least just an opinion on what he might think about it?
Yeah, he gave some advice, kind of his thoughts, how he would go about it, kind of recommended I reach out to local lenders and kind of see what they would do, kind of reach
Okay.
out to private lenders too. So he kind of recommended going about it that way.
Okay, and then could you just like explain briefly what our original plan kind of is, or our plan so far, or what you have so far, and then maybe we can ask Nolan and the rest of the group if they have a better idea for
Yeah.
financing.
Yeah, so the plan, tell me if I'm wrong, Zane. The plan
Okay.
was to get regular bank financing, 80% LTV is what the banks told me they could offer. And then for that remaining 30% for the down payment, kind of get more of like a private lender, maybe a shorter loan, maybe a bridge loan even to kind of get that down payment in place. And then since there's a month-to-month tenant there, maybe see like over the next, let's say 6 months to 12 months before I want to kind of refinance to kind of get that month-to-month tenant out or have them sign a 5-year lease and then have another tenant that their lease is expiring in January to either up their rent to market rent or find a new tenant. So there's 4 tenants, all the tenants are under market. They're like
What
averaging
is the
like
how much term do they have left?
so out of the 4 tenants, one tenant's lease is expiring in January, the second tenant's month to month. The third tenant is expiring in like 2030, so they just signed a lease, and the other one is 2027.
Okay. So here's a thought, just to be out of the gate for everybody to be aware, or not aware, but just to be cognizant of this. when you think of a building, now look, this is a good deal in my book, just from the gun, like a gun to my head, like not a bad deal out of the gate. In my opinion, too, the name of the game for you, Solus, will be to, in underwriting and in due diligence and your letter of intent, your purchase agreement, to make sure that they are aware that, hey, this purchase is going to be contingent on us executing leases that are going to extend through 2030 or whatever, whatever that it looks like. And that might be one of the reasons why they have it priced so aggressively is because, or maybe nobody has touched it, is because there is fear of maybe somebody leaving. And then that will just obviously disrupt your net operating income, right? So right now, as the building sits, if you have an 11 cap rate, you obviously have maybe a debt service coverage ratio of like what, 1.75, 1.8 maybe?
Yeah, 179.
Yeah. So you have something that's pretty strong, but you got to underwrite the deal in my book out of the gate as if those other tenants with those short month-to-month leases are going to leave in a month after you close the deal. So as long as you have maybe one anchor tenant that you know is going to be there through 2030, he can at least service your debt. And then you got to think about maybe some leasing commissions and things like that to, be able to float that. But you raise the price up to market rent, then you might be able to refinance after that. Does that you follow what I'm saying?
Yeah, that's actually what Zane recommended
Consideration.
too.
Good. Yeah. Well, yeah. Zane's good at things like that. That's right.
Yeah, I taught Nolan everything he knows.
That's
So
exactly it. That's right.
that's why he's
Right.
repeating me.
That's it.
No,
Yeah.
no, but no, that's what we did. So like on that
Good.
month-to-month
Good.
tenant, we took out their cash flow.
Uh-huh.
But on that tenant that expires in January, we may
Mhm.
have to look at that and just see what the other two tenants are paying in rent and like add that up and see what we could service debt with or
Mhm.
see how much that is and if it's able to service debt. And then I think we'd be good to go from there. But yeah, and so then though what I'm thinking or what we were trying to figure out is if we're buying it at such a high cap rate, then wouldn't it be best before acquisition to go to this local bank that she's been in contact with and ask them what their market cap rate is or what they would expect, the market cap rate to be for that type of building. And if we can bring the cap rate down to, 8.5% or so off of 11.7 on a refinance, the valuation would be much different and able to refinance there.
It's not gonna they're not gonna refinance based on the market cap rate. They're gonna refinance, which and I take that back. The refinance is gonna come based upon the appraised value, but it's also gonna come based on the debt service coverage ratio. Like period dot. So if a building is worth 2 million bucks, but the debt ratio is 1:1, they're only gonna lend you money at where the debt ratio is 1.25. You see what I'm saying? Even if
Yeah.
the appraised value is super high, it's more risky to lend you more money when the debt ratio is not there. You see what I'm
Yeah.
saying?
And so either way, I mean, if we look at the debt service coverage ratio now, that's 179, for example, and then they go down to 1.25 for refinance, is that still the same principle?
It's very similar. Yeah, you would just if you go into the bank. Let me ask this question too, though, Souls. Who do you know who actually holds the mortgage on it right now? And maybe if they don't have a debt, which some people don't have mortgages, who was the last bank to hold a mortgage on that property? Do you know by chance? Have you done that homework?
No, I don't know. The seller has been kind of like he won't even share the leases with me without being in contract. So I can't ask like too much of
Sketchy.
him.
That's sketchy to me. That's super sketchy. And I'm not telling you what to do. What I would recommend, me just, you're in the group, we're talking about it. What I would recommend is I would meet this guy for coffee. I would just like go and buy him a cup of coffee, introduce yourself. I've said it before. Spend 30 minutes getting to know the owner as like a person. Again, ask him what his golf handicap is. Are his kids what sports do they play? Did they graduate college? With what degree? Like silly questions like that. But it lowers any like friction. It really does because it shows that you're a real person. You're not just like some LLC that's just sending postcards trying to buy his property. It makes it more tangible, more real. And when you say, look, I really value, I think your property is really cool. I like the and what it will do is it will open up avenues and opportunities to even obviously guy leave money in the deal. I mean, you never know. But I
Mhm.
think that if you can find a way to meet with the seller and you have these brokers and this, that, and the other that say, oh, I don't want you meeting, this is where you can have the attitude to be like, this is my way or the highway.
Mhm.
And Zane knows it. He's with me every day, but I will find a way to meet with that individual. Like I don't care what it will take. You meet with that seller, and again, you have these brokers that just they want to keep everything to themselves. If you meet with the seller, it allows you to actually be a real person, and it just totally gets rid of any like sales objections or any animosity, and you're able to actually talk as people. And it's not so much of like a transaction. You can always that's when you can always go back and say it's not me versus you here. It's actually you and I versus the government. How do we keep more money out of the government's pocket and more in your pocket? And they're going to be aroused by that. They're going to be excited because they're like, oh man, I can. And that's when you make your seller, finance pitch and your offer. But I'd say this, like if you have a broker that's wanting to hide the seller or you can't get a hold of him in, like I would tell you just to find a way. Like find a way, figure out who how has the debt or had the debt in the past, call that bank up, say that you're going to buy the property, do they want to hold the note still? You have ways to get in front of the right people to make the deal move forward. Does anybody else have a thought or a question on that or an opinion like as the way that I would kind of approach it or had the way that you guys would approach that?
I would say the most helpful hint that Zane gave me was to basically just say, if you actually want a serious offer, then I'm going to need to see the tenant financials. So now I have brokers who are working on getting me tenant financials so we can actually plug the numbers into the pro forma and into the the I forget the name of the sheet, but it's the sheet that basically goes over all the tenant financials.
Due
Like the
diligence
due,
or
So
whatever?
that way you can actually see what the deal is going to look like. Yeah, yes, thank you.
Yeah.
The
Yeah.
due diligence. So that seems just saying that period seems to have gotten me. They're actually working on getting me the financials instead of me just sitting there putting numbers in a pro forma with no real context behind being able to make an offer or present it to somebody to get an offer.
Mhm.
yeah,
Yeah.
that's
But that's
great.
that's yeah.
No, that's great. And I was also thinking, Nolan, like if they lowered the price very recently down to was it the 560 Solus?
Yeah.
And then now you're at, 535.
535. Mhm.
They're motivated. We don't know exactly what's going on behind the scenes, like you're saying, Nolan, how it's kind of sketchy that they don't want to share the leases. But I'm wondering, my question is like, I think you've done this before, but getting it under contract, just putting up earnest money, getting it under contract, is it worth doing that and then saying, hey, I need to talk to the seller? Or like, okay, now give me the leases and the tenant financials, and then of course backing out if anything's just like way too sketchy.
I've done it both ways. What I usually the the only kicker with going under contract is if you gotta tie up some cash, whatever. And that's one thing where that Matt Smith can dial in for us. Solace if that's the key. Like they do earnest money financing, so you can do that. But I've done deals where I just tied the deal up just to get my hands on it, and that was just get my eyes on everything and knowing that I really, really recommend this piece too is um, you can have your attorney review the purchase agreement. And I've got guys that my attorney that I would recommend, but I really think it's important for you to read it yourself, like read through the purchase agreement, understand the vocabulary. I mean, it sounds silly to say this too, but copy and paste it, put it in Chat GPT, tell them to give you like a 3-page book report on what the purchase agreement says. I mean, but most importantly, just understanding the vocabulary of what you're on the hook for, what the seller's on the hook for. That way you can get but most importantly, the best way you're going to become a better investor is if you are in the trenches, um, doing the homework and doing the due diligence, not just third partying it out. So, um, am I wrong there, Zane? Do you have an opinion on that?
No, yeah, I mean I agree, but of course it's preferable to get all the stuff handled before going under contract. But do you think if it was a deal where the seller's motivated,
If he's motivated, if he was at 560, he came down to 530, I bet you he still got more juice you can squeeze. Like 1000%. I mean, go back and offer back what you said and just be like, look, this is kind of where I'm at. Take it or leave it, guy, or kick rocks. Like, I mean, he
well,
just
what
come,
I'm
he just coming back at halfway because that's just what you do.
no, yeah,
I mean,
true.
honestly, like I would have done the
Well,
same thing. I did
like
that
Solus,
same with the garage doors.
What
What
was he at before 535 or 5?
580 is what it's listed for.
Okay, and so I'm wondering, Nolan, like if you get it under contract and he doesn't, comply with all this stuff, like meeting in person, tenant financials look weird, or like the leases look weird, that's like renegotiating power, and you already have it under contract. So if like the 5,300 bucks is not too big of an issue um to tie up for like the time being, I'm just wondering, Nolan, like, do you think that it'd be worth retrading during contract with kind of like, your pickiness?
Well, here's a question. I'm gonna put Richard Brewer on the spot. If Richard is on this call, I see him on here. I like to put Richard on this spot because you were dealing with that deal, that situation, what, maybe like 4 months ago with that one building you were trying to buy, maybe in Douglasville, right?
Yeah.
Tell us what that story was and how you kind of dealt with that whole circumstance. If you don't mind being called out.
No, I don't even mind calling. I was actually on another call and I was ending it when you heard my name. So give me the quick synopsis.
A
What's the question?
long story short, though, is you went under contract on that building. You had a tenant that didn't have the very strong financials. You were trying to
Yeah.
retrain him. What? How would you go about, or how would you go about where you buy a building based on what the cash flow is, then you get actually into turning over the rocks, and you discover, well, maybe the financials of this tenant is not as strong as maybe what we anticipated, or maybe they're stronger, right? Who knows? But
Yeah.
if you're in those shoes, how would you, or how did you go about negotiating, that deal?
Well, we basically we made an initial offer, got all the numbers right in the pro forma, which was certainly under their asking price, and um, they didn't like it. They got mad and said, "Nope, we're done." And then he came back to us a couple weeks later. You actually predicted it, Nolan, on a call. You said, "You never know; those guys might come back," and they did. And because they were motivated to sell because he was in. We didn't realize it at the time. We knew he was in some financial straits, but we didn't realize how bad it was. So once he came back to us, we said, "Okay, we'll reengage with you, but we're going to need to see your financials and." A little more detail than what we had before. We got that, and they were worse than we thought they were. So we retraded at a couple $100,000 lower than our original offer, and they didn't really like that either. And really, where we ran into the issue was from a lending perspective, they just couldn't get over the hump of just how bad his financials were. So really, the play there would have been had we known what we knew earlier in the process. What we should have said is, we're going to make this offer, but it's contingent on finding a new tenant or finding a new tenant and then making an offer because that tenant just wasn't going to fly.
Nice. No, no, no. Perfect to know. And that's couldn't agree with you more. And in this circumstance too, just for you, Solace, and if anybody else has an opinion, I'd like to hear yours too. The thought is that if you can retrade this person after you have more information, it gives you more leverage. You have more leverage at the end of the day when you have more information. And if going under contract and putting up some earnest money, which is again refundable for any reason. I mean, I've actually I did this deal about 2 years ago where I was under contract to actually develop an entire property, and the lease went through, whatever. You can basically renege on a deal legitimately if you don't like the color of the paint. Like there is no rules on getting out of a deal. So going under contract is not that big of a problem. You just tie up earnest money, but it does allow you to have access to all the documentation information. And then most importantly, like Zane said, you can just begin to retrade price based on that information that you uncover. You know what I'm saying?
Well, I did.
All that.
Oh, sorry, what was that?
Just saying you follow how I got to that.
Yeah, I did add in my LOI some contingencies. So I added that I would approve of the tenant financials and their leases and their overall financial strength.
Yeah.
And when the seller returned the LOI, he didn't cross that out. So
Hmm.
he didn't seem like,
That's good. Maybe the tenant's pretty strong then.
yeah, I mean, that's what I'm assuming if he didn't fight that point.
And one thing that this is for everybody here too, because I was dealing with this on another deal. When you guys are underwriting the tenant, if you guys are buying a building with an existing lease, the way that I was actually asking my one of my bankers about this, how do they underwrite the strength of a tenant? That way you can actually know. I mean, if you got a 5-year lease, you're like, oh yeah, the lease is no problem. It'll be easy, but you want to make sure that the tenant can actually pay you rent every month. You're never going to get a clawback on ACH. Make sure that and I've talked with Zane about this. I spoke with my banker Patrick Levette, who's at Renaissance Bank. What he likes to see. Oh, you guys have probably heard of a debt to income ratio. Like on a like if you have income and then you have to service debt on like a residential property, it's almost like rent to revenue ratio. So making sure that that your tenant is earning at least almost like a debt service coverage ratio, at least 1.4 of gross of net operating net, not gross, of net income compared to what their rental income is. So very, very simply, if if they make $2 million a year, the business makes $2 million a year, and then they pay $1 million in expenses and everything, and then they're left with $1 million of profit. Actually, I need to use like a. I went to public school, so I'm not that smart off the top of my head right there. Whatever that number looks like, basically, if they have $1 million in profit of net operating income, their the debts or the rent that they can pay needs to be like 600,000. Anything more than that, that ratio starts to squeeze a little bit, and that's different than what it would look like with your bank financing. So I want to make sure that y'all follow me with what I'm saying there.
Yeah, it's
Yeah.
sort of like a mortgage when you buy a house. The bankers, they don't want you
When you
paying
buy
more
a
than
property, you
30%.
get a mortgage, make sure your income has about, it's usually like 1.4 above whatever your debt service is. It's the same thing with your rent to revenue ratio. As long as the income from the property is about 1.4 above. So if the rent to you is worth $100,000 a year, they need to be having a net operating income of $140,000. Does that make sense? Okay, good. Just a thought. And I didn't come up with that. That's just what my banker said. He's like, that's when we underwrite tenants and their credit worthiness. We just like seeing something that's got a decently strong. And then for you, your debt service to the bank is going to be like 75,000. So you'll have a 25,000 of cash flow on that $1 million site, but just know that the tenant has a much larger capacity of earned income that they can service the debt or they can pay their rent. So there's that. Okay. What is next? I know we got a couple other guys on here. See Dave, I see Matt. We talked to you guys a minute ago. Rigel's on here. Greg's on here. Parker. Anybody else working on anything else as we're kind of moving along? I don't want to just kind of go off for one thing or the other. What's everyone else working on?
I've got a deal, Nolan, the one we talked about before, if you've got a quick
Okay.
minute.
Yeah, man, let's do it.
So this is the one that's down the street from you on 4th Street. We finally got the lease. The lease was just signed in August, so it just recently signed, 5-year lease,
Pull this.
absolute triple net.
Is it net? Is it triple net or is it absolute?
Absolute. He's doing maintenance,
Nice.
taxes and insurance.
Is
And
he in
so
charge of also the is he also in charge of the
The
roof
roof.
structure?
no, they're gonna anything over 15,000 or anything under 15,000, he's got a handle. I think is what the lease says. I gotta go back and look at it. But I sent it over to Ryan Blackenberg, and he said everything looks good. All he needs is the sales document, sales agreement, LLC, organization docs, EIN number, all that fun stuff.
Yep.
And from his perspective, the financials look good, the lease look good. He likes the building. It's right off of 65. You know where it is.
Oh yeah.
So I know you said it was kind of in a scooched over a little bit to the maybe the not the best side of town, but you're very familiar with this property. So
Oh, it's right down the street from a couple of my other buildings. If you guys don't already have this, this should be in your just the CRE collective contacts. So y'all should already have this. I want to make sure. So it should be in your onboarding folder, right, Zane? All these
yep,
guys. These are just
Yeah, you should
Kansas
have it, but if not, just let me
brokers,
know.
accountant, attorney. I need to actually add Brian Cloud and my attorney there. Contractors, banks, all that kind of stuff, assurance guys, all that stuff. So as we kind of keep adding, I'll just keep adding that to the, but make sure everybody has that. Um, so there's that. And then Richard, I'll share that email that you just sent if that's cool, like the other
yeah,
day.
yeah,
So yeah, you
yeah.
want to walk us through this?
Yeah, we can if you want to open some of those docs.
All right.
So pretty straightforward,
Nice.
bank statements and so forth.
Here's some statements from this guy. Here's the lease. You know. But what's your opinion on the tenant, Richard?
Well, he's got a government contract,
Oh,
and so
shit.
he's
Nice.
that's one of the documents in there. So he's got work. His financials look good. If we were just talking about his ratio. His ratio evidently looks really good. Ryan was excited about that. I think he's pulling in a couple $1 million a year.
Yeah,
His rent, his rent's on the low side. It's like 550 a square foot. So
550 is pretty strong though, Richard, in my opinion. I
yeah,
think
well
550 a foot net is pretty strong.
for that neck of the woods, you're right. Over here in the Atlanta metro, we're seeing higher numbers, but this that's just different markets. But
Thinking
yes, so
a million one or whatever he's doing.
yeah, he's got a couple of years of tax returns there.
Million two,
Um,
you know.
I'm under an NDA, so don't show too much.
Well, we're not sharing this out anyway, so who
No,
cares?
that's true. That's
It's
true.
part of our. If they got a bigger problem, they can come back and sue us. That's
That's
okay.
right.
Well, we'll,
We'll
we'll,
get
we'll hang up Joseph in the back for that one.
we'll get Brian involved.
There we go. Yeah. Um,
Yeah, so they're
you read
asking
through this
one,
lease?
huh?
You read through the lease?
Briefly, I need to go back and I'm glad you said that a minute ago. I need to go back and I haven't had a chance. I've been on the road, but I'm gonna go back and read it all. I like your idea of
How
using
many
Chat
months there
GPT.
are? Because one thing that you should consider, not should, but you I would recommend considering is um again, just to be clear for everybody, there's a difference between a triple net lease and an absolute net lease. A triple net lease is where the tenant is responsible for the taxes and the insurance, but the landlord's responsible for the roof and the structure. In an absolute net lease, the tenant is responsible for everything. So I say that tenant, I mean structure, roof. If the building falls over, it's on the tenant. It's not you as a landlord. So um,
Yeah, it's not technically absolute then, because there is a threshold. Anything above, I think it's 15 grand on the roof.
okay.
The
Yeah,
owner is,
just get your eyes on exactly what your
yeah,
threshold is, so you can have an understanding of what your responsibilities and contingencies are.
right, yeah.
But dude, I do like that building. I'll be honest. I like that building. I like it.
Well, so here's
I
my
like that building when I
questions.
walked by it. I was like, dude, this is a nice site.
Yeah, it's got the roof's new. It was just put on last year, I think it was. So I'm excited about that. Not having to worry about the roof a whole lot, and their new siding as well. So that's exciting. So here's my question to you, Nolan.
Yeah.
I'm talking to my broker. He's out of Atlanta. They're asking 1.7. That's an old picture. That's an
Yeah, it
ugly
looks like
picture.
shit there, but it looks really nice in these other sites. I mean, it is like it looks
Yeah.
new, you know.
Yeah, they're asking 1.7. I think we can get in at maybe 1.5 ish. Which still makes all the numbers work.
Yeah.
I'm gonna try to figure that out. But what I want to do is do exactly what you just said. I want to go meet with the seller. And so I'm trying to get that information from my broker right now and just sit down with them. I'm willing to drive over to Birmingham and do that. And if so, I'd love for you to join me. If you can, just that'd be a fun conversation to have with them. And just if we can't work out a seller financing deal with them. If not, then we'll get
Well,
Ryan
the good
involved.
news is like, and this is for everybody here too. I mean, think about it. What Richard's doing is the right way, where he's basically lining up his debt before he's even under contract. I mean, think about how much more agile and precise you can be on a deal when you know that you basically already have a term sheet from a bank. You can go into, in my opinion, you can go and negotiate with confidence because you know that you know that you can get debt. You know you can actually close on the deal because you've got a relationship with the lender, or the lender at that point is familiar with the asset. They're familiar with the tenant or whatever. But most importantly, it's gonna strengthen your offer because you know you have a higher likelihood of closing. So in
And I've
my
learned that the hard way.
what's that?
I say I learned that the hard way. Some of the other deals I worked on, everything looked good. We got down to the wire and like, we
Yeah.
want to see proof of funds. Can you do this? I'm like, well, I don't know yet.
Yeah,
I'll
you're
let you
trying to
know.
work the debt on the other end, but like
Yeah.
you know that you've got the debt on the front end, it's going to allow you again it's going to be more, it sounds silly, but like internal, that you'll have more confidence to be able to go into those negotiations knowing that, hey, I actually can close this deal and I'm not just like blowing a bunch of smoke. I can actually do it.
Yeah.
Um, and so, and again, and also for everyone here, that Ryan Blackenberg with Millennial Bank, Millennial only has like $300 million of assets, and which means, long story short, that they don't have a whole lot of cash to lend. So if you guys can, but also on the other end, that means that there's no regulation. They can do anything that they want. They can lend money however that they want. So if you make them a really good offer and a strong offer on a building, you're going to be in a much better circumstance and opportunity because they're not, the government, the SEC is not telling them how to lend money. They're not regulated by anybody. They're not packaging up their mortgages and selling them on Wall Street. They're holding on to them. So know that that's where a relationship that when you have with a local bank in your town can really end up being a really positive relationship, I guess. So just a thought. No, Richard, that's awesome, man.
So I'll keep you
Pick the
updated.
phone or bring it on. Maybe make it like later in next week before after you have this baby. Once I get out of the hospital, we'll
Well,
see.
yeah, I've got to do it anyway. I'll be traveling. So yeah, congrats on that, Papa. So we'll get that taken care of first, but I've got to get that information from my broker so if I can
Okay.
wrangle that out of them. And I'm going to use that line that I forget who said it a minute ago. Hey, we want to make an offer, but I really want to have a chance to speak with the seller.
I
I
think
want to
that's a great one. That's a great one. We want to
develop a
make an offer. We have
relationship.
the liquidity, and I think too for everybody here as well is if you can change, and I've discovered this in my own in businesses anyway, when you just change a couple of words of your vocabulary, it immediately elevates your sophistication to a broker or to a seller. And honestly, Rigel, I think he's on here right now too. Rigel is on here. I mean, Rigel, would you mind speaking on that real quick, just on like the vocabulary that you're using with some of these
Mhm.
brokers, where instead of saying like, "Hey, I'd like to buy a property," you say, "Hey, I have interest in purchasing this asset," or you say, "Hey, I have, I'm not opposed to purchasing, or I want to purchase, not buy," or "Hey, I'm looking at doing this. Hey, I'm considering this opportunity." Like little tiny little vocabulary words that you can change that immediately elevates your sophistication. Right, Joe? Do you have like an opinion on that, like with what you're doing?
Yeah, absolutely. Yeah, I think being like new in the space or just younger, brokers immediately they just want to know, are they wasting their time
Yep.
talking with you, walking buildings, whatever it is, going through deals. And so I think the sooner you can establish that you at least have some sophistication or are keyed in on important things that only sophisticated people would know. Like the broker the junior broker who introduced me to the broker I'm actually working with, like he didn't even understand how seller financing worked.
That's wild.
And he's like in his 20s or whatnot. But like, that kind of blew my mind of like you've been selling mostly apartment buildings for like 3 years, and that's just not in his vocabulary. But his senior broker who more focuses on industrial, like he knows how all that stuff works. And so when I started being able to give really detailed criteria, not just like physical metrics, but detailed criteria on like the owner situation I'm looking for. I'm not looking to buy from an owner that wants to go buy another building. I'm looking to buy from someone that's retiring because maybe they'll be more interested in leaving money in the deal.
There you
And
go.
you just start stacking those things. Or, I'm looking for tenants that have 3 years left. If they don't, maybe we'll lease this. And I think when you start building that out, just on email chains or phone calls, like brokers give you time of day, they give you respect. They'll send you actual deals. So, and speaking of that, I do have some deals I'd like to go over if we have time.
Yeah, yeah, yeah. And before you jump into what you're saying, I would just say this too. It's little tiny knick-knack, and it sounds silly, but tiny knick-knack words that you can use that kind of prove your sophistication. Like if you can use, and you guys can practice this as you're driving home. I know that sounds crazy, but if instead of saying that, hey, I'm gonna go and look at a building that's 10,500 square feet. Don't say that. Say I'm looking at something that looks like 11,000 feet. Like you round up and you just say the word feet. You don't say 10. I'm going to go walk a property that's 10,500 square feet. Like that's not that's